Hello everybody, welcome to the TraderMerlin Show. It is your trading week wrap up. It's your Friday edition. Oh wow, look at that hair. What's going on with my hair? Take the dog for a walk around the block and look what happens. Man, I look disheveled. Oh, all right, let's kick things off with just a little bit of a cheers to everybody out there. Cheers. Big up, it's not your whiskey today. I'm going to Pierside. I have trying to clean out my cabinet, so I got just a little bit left here. And I got my friend coming in from Italy. He'll be here in a couple hours, so hopefully we'll put a little dent in the whiskey cabinet this weekend because it's overflowing. I gotta keep up with the supply. So the demand is not keeping up with the supply of my whiskey cabinet. So cheers, everybody. Hope you had a great week. Certainly a little bit better over Friday than I've seen for the past few days with my positions and portfolio, which I'll talk about here in just a sec. That's nice. Nice little whistle wetter. All right. So, major topic of the day, obviously, is going to be the unemployment rate. So let's go take a peek at those numbers right now, just so we have that fresh in our heads to start things off. Really wasn't that bad. I know a lot of the media has been pointing out the bad jobs data, but the unemployment rate came right in line with expectations. And again, it is increasing. I'm zooming in here to the most recent data. It's the highest level we've seen since, August of 2024. After that, we got to go all the way back to November of 2021. So it certainly is not a great thing to see the numbers tick up like this. But is it enough to really sway Jerome Powell's decision? No. I did not update my little table that I have for you guys to show you kind of what the probability was and what the odds are of. Let me see. I might even have it here. Let me see. Where is my Fed scorecard? All right. Let me bring this one up for you guys, and we'll update ourselves here. Oh, trying to do too many things at once on our trading week wrap up. There we go. There's your scorecard, right? So we don't have our CPI and PPI numbers until next week. We have our PCE the week after that, so that's no big deal. And really, I guess I did update the unemployment rate. There's a 4.3 number that came in. So all in all, when you look at this, so far, most likely you're going to see a rate cut. Now, the Fed funds futures have already priced it in significantly, right? It's like there's a really great chance that you're going to see it, those rates cuts. Let me bring it up here and go to the Fed funds futures. Sorry, I was reading a message. I was verifying my times for you guys for the Florida show. I'm told that I am doing a presentation on Thursday night, Friday, and then they're probably going to add me another one on Saturday. So I might do a whole bunch of different presentations, and of course, I will see all of you there. Those who are going to be there. Of course, yes, I will definitely see you at the expo. If possible, we will definitely go out and grab a drink, maybe some dinner, see what happens. Again, I'll be there Thursday night, Friday night, leaving Saturday. So I'm only going to be there 2 nights. Only 2 nights. All right, so what's the FOMC say about this? Right now, you're looking at 92% probability of a rate cut. And notice now that there's no rate possibility of it staying the same. I think that's an interesting transition. If you go back just to yesterday, there was a little bit of a chance of rates staying the same. That was a 3.6% chance. A week ago was 13.6%. So the data that's coming out is certainly causing more and more people to think, hey, we're going to get a rate cut. And it would appear so. The only thing that I'm going to keep harping on is that PPI number. That PPI number at 0.9 is bad. Right now, the expectation is that we're going to come out at 0.3 for the next one, which would be okay. Certainly okay, but not great. And that means if we got anything 0.3 or lower for PPI next week, and same thing for CPI. If both those numbers come out at 0.3 or lower, then I would expect to see a 25 basis point cut on September 17th. The cut is late. Probably need 3 before year end. Oh, you're just saying that because you want to win a bet. I don't think so. But if you look at the forecast, it is interesting you say that, Big Eb. I don't think it's too late at all. For what? What is it late for? What does it need to stimulate? It doesn't need to stimulate our economy. We've all looked at these charts. But here right now, as we stand today, 67.7% chance. So that's over 50%, obviously, that we're going to get 3 rate cuts by the end of the year. So the market has a pretty lofty expectation of 3 rate cuts by the end of the year. I don't think so. You might get lucky and get 2, right? You might get 2, but I don't think you're going to get 3. I don't think so. Given the way that the inflation numbers have been sticky, Jerome Powell will probably cut 25 basis points, wait a month, see what happens, maybe cut again, but I just don't see him doing 3 times. However, what the heck do I know? As we go into the end of the year, you do want to juice things up a little bit and give yourself a little pat on the back because, of course, Powell will be leaving next year, if not sooner, if he's not replaced. I'll tell you, if he doesn't cut rates in September, you're going to see the Trump go after him again and again and again and just make his life miserable. So, yeah. So he says the labor market slowing is hard to turn around. Agreed. And let's go look at that data too. So obviously we had the unemployment rate, which is the one that most people are watching, but we did have the non-farm employment change, and that was a significant disappointment. We were expected to go from 79,000 to 75,000, so a slight decline. Came out at 22,000. That means a lot fewer jobs being created than expected. So if we zoom in here, the most recent data, you can see a clear trend here. And I think this is what you're referencing, Big Ab, is that market for jobs is definitely cooling off and slowing down. Not great. So if this continues to go lower and lower and lower, that does put more pressure on Jerome Powell to cut rates, to stimulate the markets, to get things juiced so you can get, maybe another rate cut. But man, 3 by the end of the year, that to me would signal that the markets are in trouble. I don't think we're in trouble. I don't think even if, like I say, even if the unemployment rate got up to 5%, that's still not horrible, right? So you do have, as Big Ed pointed out, you do have average hourly earnings. That stayed the same, so that's good, staying at 0.3%. But that's been fairly constant. I mean, when you take out what happened for the pandemic, let's go into here. 0.3 seems to be the norm. We oscillate above and below it, but as long as we stay at 0.3 on those numbers, that seems to be good. Lisa says, stimulate what? People are spending like money still grows on trees. I know. It's crazy, and it's not going to be any different for me the next week because I got my friend Nick in town, and I'm going to be spending a lot of money for 2 weeks straight. And then I'm doing all kinds of fun stuff here soon. Got to live a little bit. Now that I'm free, get to live. Damiani says, the big question is, are we cutting into normalization or recessionary environment? It's a great question. I could pull up 10 people and get 10 different answers on what they think this market is doing. I'm hearing a lot of people talk about recession. I'm hearing a lot of people talk about we're headed to an inflationary environment. We're going to rate normalization. At this point, as I mentioned many times, the fact that we still have so much uncertainty with regards to tariffs and the impact of those tariffs on inflation, as I pointed out yesterday and this morning for my crypto program, those are just too many unknowns, which is why I think the prudent thing for Jerome Powell to do is keep rates right with that. Now, if we continue to see deterioration in this jobs market, right? Unemployment ticked up a little bit, but no big deal. This is a concerning trend, the non-farm employment change, where you see it just drifting lower and lower and lower, and it's been weaker than expectations. Now, if I go back a couple of days, let's go back to Wednesday when you had our ADP non-farm employment change. Oh, actually, no, sorry, that was Thursday. It's usually on Wednesday, but because we had the short week, they kicked it to Thursday. There's another one where you had a bit of a tail off in those numbers. Let me bring them up for you here. Right? And this isn't as dramatic as we saw with the other non-farm employment change. This is the ADP, which is a different measurement, different calculation. But I think it's pretty clear. You can see the trend is lower lows, lower highs. Same lows, but just kind of drifting lower and lower. Not really a good sign. And it's not like this is 1 point data, right? It's been getting lower and since October of last year. So we've been pretty much in 10, 11 months of decline in ADP non-farm employment change. That's not a good sign. Now, let's go pre-pandemic just to see what it was like. Right now, we're at 54. This is what it looked like pre-pandemic, all right? I'll even take out the crash so it just looks like positive numbers. We're at 54 right now. You can see our number on the right-hand side of the screen. Historically, this is not really a good sign. I think that's what you're referencing, Big Eb. It's kind of like, we are at a significantly low job creation point. And I do contend that this has to do with technology. This has to do with markets and businesses trying to rein in profits and lock in. And I think this also has a lot to do with AI. More and more things are going to get replaced as we go forward. But anyway, that's your kind of bad news on the horizon. And certainly that is a catalyst for Jerome Powell and the Fed to be cutting rates. Because remember, their job is full employment. Now the question becomes, does this lead to stagflation? Remember, we had Bill Addison in the program a couple weeks ago, right after the last Fed announcement, and he's been saying for a while, and I do agree with him, that there is this risk of stagflation, which is slowing GDP, which actually GDP ticked up a little bit, probably because of the tariffs. We have rising inflation, which we're seeing a little bit, right? Nothing noteworthy, and we have rising unemployment. So if he cuts rates to fight the unemployment issue and stimulate the economy, that will most likely increase the rate of inflation, also increase GDP. So we're kind of in this conundrum of what is Jerome Powell going to do and the long-term impacts of it. So Trump is correct on rates. What, Margaret, that he wants them lower, that we should lower rates? Well, I mean, if you look at the direct impact of lowering rates, it's cheaper, easy money. So that encourages businesses to expand. That encourages businesses to spend more on research, development, employees, and grow their businesses because money's cheaper and you have a juiced environment. Does it guarantee that it's going to fix the job market? Does not at all. And I think that that's going to be an issue that we're going to have a conversation with, not maybe this year, but I think next year when we see all of a sudden the Fed will be lowering rates to stimulate the economy to drive things, but we don't see the jobs created because it'll be technology. It's going to be AI driven, right? Those gains, or they lay off programmers or developers or writers or whatever because I can use AI. I think I showed you guys the other day when using ChatGPT, like I could literally get rid of a nutritionalist because I don't need a nutritionist anymore because I can just take all my medical reports, drop it in ChatGPT, tell it what my goals and objectives are, all my weight, everything that I want to achieve, and it will tell me exactly what to do, what to eat, when to eat, and shop for me. So like certain jobs are going to be obsolete, and I don't know how that's going to get replaced. You know, how's that person going to get a job in that industry? Right now, it seems like to me like AI is going to take a larger chunk. So we could see this being a pestering, lingering problem as unemployment continues to rise. And my guess is within, let's say, 5 to 10 years, that this is probably one of the biggest problems in the United States is unemployment because technology is going to replace so many jobs. Not to sound like, where's Oliver? It's my doom and gloom moment, right? What did Liz say? Is it October that Doge layoffs will start showing up on unemployment? I'm not sure when they should start showing up. I would think they've already shown up, right? Because those individuals because they have a little window of time of severance package. Good question, Liz. I don't know that answer. That one I don't know. Watch the video. Powell's taken too narrow a view on the jobs market. Margaret, I'll tell you what, that Mohamed Al-Arian is probably one of the smartest individuals in finance. He is a brilliant guy. I would listen to what Mohamed says over anybody else I see on CNBC or Fox or Bloomberg. Mohamed is pretty amazing. That's a great question, Liz. I don't know. But that could be a factor in this as well, where you start to see those people hit the books. Let's be fair. Those individuals are getting a severance package, but many of them are probably already in other jobs, right? They've just gone to look and they're still getting paid, so they'll get double dip for a while. So I would assume a lot of those people have already found other jobs, but some of them certainly will have not, and that will show up on the unemployment as well. Yeah, I do. You know, and it's, I don't know why I respect him so much. It's just because I feel like what he says is so true, and it's just very matter of fact. And I don't think he cares what other people think about what he says, so he's not afraid to mince words and call people out for making mistakes, and he's usually right. It's like not Joe Kernan, Arthur Cashin, right? I mentioned Arthur Cashin was one of the most respected guys I knew on the floor because it seemed like whatever he said happened. And those types of people are the ones I really want to follow. Rita says, not in the animal industry, the dogs will bite even though muzzle on. They try to bite. You just stay away. If dogs with muzzles, I just stay away from it anytime. I remember your conversation with Don Fron about AI and jobs market. Well, and live for him, you know, that's an interesting conversation because Don has a bit more of a catastrophic view of AI and the markets, right? He was said that he thought that 50% of the workforce would be robotics by the end of the year, and I was like, that's wild, no way. But do we get to a point where 50% of the United States workforce is robotics or AI? And I do believe so. I think it could actually be higher than that, but I think it's going to take a few years, right? We saw the robot demo of Optimus. Optimus looked kind of silly, really was slow, but technology is moving at such an enormous clip right now that, I could definitely see 50% of the U.S. workforce is robotics and AI. Yeah, maybe a decade out. You know, and then you really have to wonder, well, what are people going to do for money, right? It's an interesting new world. I think we should have some sci-fi movies coming out about that prospect, right? About how AI takes over and people don't have jobs and what are they doing? Are they robbing, cheating, stealing, fighting to get all this stuff? It's, gonna be good. Funny one, Liz. Funny one. All right, so as it stands now, it looks like we're going to get a rate cut. I think Big Eb, based off what the market is predicting, will win himself a full dinner, including drinks, dab nabbit. You said 2 cuts by the end of the year, right, Big Eb? Or did you say 3? Just trying to get you to go for 3 so I can have my 2. No, you said 2. I think we'll get 1. It really depends on what happens with this, the core PCE price index numbers that happen same week as the FOMC statement. So what else do I have here? Let me get rid of this one, and we'll go back to my picture here. Great picture today. Love the AI one. This is a really cool one. I got like this giant bull on Wall Street with a really cool kind of explosion behind him and all the stock tickers on the wall. It looked really, 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 really cool. I love it. From a overall perspective, we look at what's going on in our markets today. Let me just bring some stuff up here. CoreWeave has been one that's stinging. You know, CoreWeave is probably one of my biggest losers right now. I did sell, I'll show you the trades here, but overall our markets didn't look that great today, right? We kind of hesitated. At one point we did break through an all-time high in the S&P futures, but gave back some of those gains, certainly when that announcement came out about the employment data. Now, looking from bottom to top, starting at the bottom, there is some really concerning pieces here for these charts. And I do mean concerning. There are some real interesting ones. Look at crude oil. So here's your crude oil chart. We've got this demand zone mapped out, and that demand zone is between $60.94 and $59.74. We came screaming back down these last 3 days. Based off that rate of descent, I think that demand zone is going to be challenged here in just a couple of days and may create an opportunity for some of you. Moving up that ladder, here was a big one. It's been 3 days in a row where that 10-year has just absolutely, as my friend Sean Kim would say, just puked the bed. This has been a pretty significant drop in the yield for the 10-year over the last 3 trading sessions. This is really, really rough to downside. Now, this is great, right? The more that this drops, guys, the cheaper capital is, the more businesses can borrow and raise money. It also makes the debt obligation for the United States much better. The interest on our debt is going to be declining, which makes it easier to pay. So that's all good stuff. Now, we talked about this kind of being a descending triangle, and now we've broken it. So depending on how you measure this, right? For me, it's this top line. So if I'm going to use this as a measuring object, right? There's your measuring object, which goes from the peak of the triangle to the base. And if you look here, once it breaks, how far down is that thing going to go? Well, the measuring object tells us this could drop us to 3.75. That's your measuring target. Let me see here. I'll put a line right here. I'll label it for you guys. It says measuring object, so we know. Just when the chickens come home to roost, we'll know exactly what that level is. Sometimes I put these lines on the chart, and I don't know what they are. This was a measuring object. I cannot type today. S-U-R-I-N-G. There you go. Measuring object target. Done. So we'll leave that right there and put that closer in. But that's forecasting a significant decline. Remember, that 10-year getting down below 4%. Now you're looking at mortgages getting close to the 6% and maybe even lower than that. That's really good, right? That's a really good thing for the housing market, for economy, for stimulus. This is also something that Jerome Powell will be looking at. Remember, he's not really supposed to be looking at this. His main goal is stable pricing, which means inflation, keep that under control, and full employment. Those are the only 2 things the Fed is supposed to worry about. However, when he sees this 10-year dropping, he's got to know that that is a catalyst for economic growth. The lower that goes, the more it starts to stimulate the increase or power to the upside. It would be 3 black crows is the pattern, Margaret. Yeah, 3 black crows. But that's just a really, really bad sell-off there. And I say bad because it's such a big drawdown, but it's actually really good for anybody who's looking to buy a home. It creates greater affordability for the homes. If you tried to qualify 3 days ago, let's put a little line on here, you may have been looking at 4.3% for that 10-year, and now it is down at, just under 4.1. Well, that's 25 basis points. 25 basis points on a 30-year fixed-rate mortgage can add up to some serious money very quickly. So that's actually a pretty good sign for the market. I know it looks ominous and bad, but that's actually a good thing. Your dollar index, still holding that 97.63 mark. So just traversing sideways are not doing much. So, okay, we'll move on from there. S&P 500, we just looked at that one. Still looking great. Slowing down a little bit, but still making higher lows and higher highs. So uptrend is intact. Perfect. NASDAQ, a little bit of a different story, right? It still looks great, but it's not making the same highs. It hasn't gotten back to this all-time high we saw back on August 13th. So not the best looking chart there for NASDAQ. Even though it's still making higher lows, it's not making higher highs. So you could almost draw a pennant formation on this. And Yeah, almost saw a pennant formation on it. Let's go top 3, podium time. Russell 2000 up 0.43. Unstoppable. At this point, Russell looks fantastic, of course, with more rate cuts coming and the 10-year falling. That would benefit small businesses more typically than big cap or large caps. So small cap is continuing to rally 0.43% today to 2,393. And our top 2. Yesterday, it looked like we might have a bit of a retracement there on gold, and I think it would be well-deserved after it's rallied from 3,300 all the way up to 3,650. Great rally, and all of a sudden now we're starting to see things rip back to the upside here, which still creates a lot of uncertainty in my mind. I tend to be rather bullish right now just because of what's going on with the trends, the interest rate discussion, economic data. I'm bullish. I'm bullish the market. I have to be because that's what the market's giving me. But when I see gold surge like this, it just makes me scratch my head going, oh, really? Gold shouldn't be ripping like this. If everything looked great from an economic perspective, data perspective, interest rate perspective, we should see gold selling off, going the opposite direction. So something's broken here in my mind. And finally, a little bit of a rally out for Bitcoin. It was much better today. At one point today, it was a lot better. And it really came crashing back down. Let me look at I think I drew it out on, I'm trying to remember which chart I drew it on. I drew it on the chart here for the class this morning. Let me get that one ready for everybody. Ba-bam. Yeah, this is the chart that I was looking at this morning with the class. And, it's interesting when you look at the downtrend we've had really since August. Lower lows, lower highs, all intact. And today was an interesting day. At one point, this is a giant green candle that went right up to where my cursor is. I'm like, man, if we get a close above that 113,250 mark, then all of a sudden, I'm much more bullish. I mentioned that yesterday as well. I think that was for you guys. I'm teaching all kinds of different classes, but I mentioned that yesterday for you guys. That kind of is the target that I was striving for. If we could get above 113,250, then great, right? Great. That means that this trend might be broken and moving back to the upside here. But we did not get that. And it dropped very quickly. I'll show you a 5-minute time frame here of Bitcoin. It was real fast this morning. There you go. It was right as that announcement came out, just wham! We were up at 13,200 and then just gave it all back. Just absolutely crushed. And we just tiptoed across it a little bit and then gave it all up. So hopefully we'll get back up there. It's not looking so great right now, but time will tell. Time will tell what ultimately happens here with Bitcoin. All in all, I still am long-term bullish, as you guys know. And no definitive action on my part yet as far as selling my portfolio for that 4-year cycle. I know. I'm still waiting. Let's see. Steven says, I did see that there was a record number of small businesses that filed for bankruptcy last quarter due to tariffs or rates. I don't know. I didn't see that. But, there's always small businesses filing for bankruptcy. And remember, the small caps were beaten down for quite some time. Now, all of a sudden, they're surging. So, unfortunately, they're getting their day in the sun now, and some of them already filed for bankruptcy. So, I'm not sure the justification as to why that is, Stephen. I have not looked into that. Could gold surge have anything to do with Indian wedding season? Yes. But that's kind of priced in. The consumption of gold from India is obviously a significant piece, but I don't think it has that big of a driver. When we look at that price chart here of gold again, I don't think that the Indian wedding season demand is the catalyst that caused it to rally up that much. Not sure why. Could it be people hoarding it? Could it be central banks? Could it be governments? I'm not sure why we've seen that big of a move, but it does tell me that people are looking for physical commodities, getting away from paper profits, paper money, locking into actual commodities. So there we go. And does it have to do with Coinbase? No, probably not. It had to do with just the unemployment data, the numbers, the data. Rotation into ETH making Bitcoin go sideways. Not just rotation into ETH, rotation into everything. So you guys know if you go to bar chart and you type in BTC.D, this is an interesting graphic here. This is Bitcoin's dominance in the entire crypto space. Right now, it's fallen precipitously, right? We had back in June, it was like 65% of the entire market cap of crypto was Bitcoin. And now you see it sitting at 58, which means money is pouring out of Bitcoin, like flooding out of Bitcoin and going into altcoins. But which ones, right? There's a lot of them. One of the main beneficiaries here has been Ethereum. Ethereum has done very well since that time. And as I pointed out on this program, and I had a pretty in-depth discussion today with my crypto program, this is, I think that with probably by next year, Ethereum will have a bigger market capitalization than Bitcoin. And remember, it's because of its utility. Bitcoin is somewhat one-dimensional as a payment network. That's pretty much what it does. Payment network and a store of value. But Ethereum does the same thing, right? Ethereum is a payment network. You could send value with Ethereum back and forth quickly, faster than Bitcoin. But it's utility. It's the ability for you to build on top of their ecosystem. This decentralized, uncontrolled ecosystem, I think is what gives it tremendous value. And especially as we have more and more companies building on top of it, like Coinbase, like Robinhood, JP Morgan, and many others, I think it could be absolutely significant. So I think Ethereum will probably flip Bitcoin next year sometime. Shayla should add ETH to his portfolio. No, he's an orange pillar. He will never touch Ethereum. He is only Bitcoin. Now, if you look at somebody like Tom Lee, which we talked about, he's jumping on the bandwagon and he's doing an Ethereum treasury, and you're going to see a Solana treasury, a Ripple treasury. You'll see them all. It's just a way for them to drive prices up. Yeah, Big Ab, really. I think it's pushing it to say next year because Bitcoin's going to continue to have money flow into it because of its institutional clarity and regulatory clarity. But as we see more and more projects build on top, for example, we know that companies now have the green light to issue stable coins. They have to fill out applications and go through the proper channels, but they can now issue stable coins. And who are they going to build on? If you were to build your stable coin on another network other than Ethereum, you're kind of foolish because the biggest business ecosystem is on Ethereum. So if I want to be on the ecosystem where everybody else is and makes it interchangeable so I can have my token swap for yours and that, I want to be part of that as well. So I think that that's what's going to be driving it. It's the institutions have designated Ethereum is the one we're going with. That's our choice. I was like, oh, and I didn't see that coming. I thought it'd be Sui or Aptos or Solana, maybe even Near Protocol. I thought it'd be some of these other ones that had much greater transaction speed. But ultimately, when you have your layer 2, it's not about transaction speed. You can do that on your layer 2. So, Lee says, what's your opinion of Bitcoin, whales moving Bitcoin, and adders holding 479 Bitcoin worth over 50 million in today's prices, moved a chunk after 13 years dormancy, blockchain. I'm not worried about that. 52 million on the grand scheme of things is nothing. I'm not worried about that at all. I think if you saw larger addresses, like if it's got $1 billion in it, and there's a lot of those wallets that have over $1 billion that haven't moved in 10, 12, 13 years, if those start to move, that would make me a little bit nervous because that's a lot more liquidity. 479 Bitcoin, there's 450 created per day, so I'm not so worried about 479. It's if you're getting like the several thousand, then that could add liquidity to the marketplace. 52 million or a billion is a huge deal to me. 52 million as an individual certainly would be a good thing, but 52 billion would be even more. I think they're selling, but that's the guts. So if a whale is moving their wallet that's been dormant for 13 years, most likely they are going to sell, right? So you add liquidity to the marketplace. But 52 million is not that much money to it from an institutional perspective. So again, I wouldn't worry so much about that. Big as a bear 7 my ETH game. I mean, you look at that chart, it looks pretty darn good, right? Crypto's been pretty weakly. Like here's Bitcoin, much weaker. You could look at other layer ones like Polkadot, dead, not doing anything. You could look at, let's go to HBAR, which actually has had a big surge, but is giving back a bunch of it. You have things like Litecoin. All right, Litecoin's actually holding up rather well. Like it's silver to Bitcoin's gold. Solana is starting to really show some traction here and start to creep up more and more and more and more. So that is a really good thing. Hood. Oh, what I didn't see today? There was supposed to be an announcement whether MicroStrategy was going to get added to the S&P. My guess is it's not going to get added too much, but I didn't look at that one today. Let's see. Hood and app added SPX. No MicroStrategy. Okay. Let me go. Let me give you these two things. So here's my two presentations for Orlando. I just looked on LinkedIn, got it verified. These are the two sessions. So Thursday, October 16th, it's 435 to 520. That's the one I'm doing called Bitcoin to 1 million, the math and mechanics behind Bitcoin's continued ascent. And then on Friday morning, the 17th, I will be doing one from 8:15 to 9:15, stablecoins transforming the U.S. economy through digital currency innovation. Those are the main two right now, and I will probably pick up something else. I know they're going to add me to a couple panels, which would be great. I always like being on panels. I think sometimes I've been on these panels a few times. A lot of times the panels, I feel like they're biased. They're going to say their opinions about something to benefit their company. And I'm like, well, yeah, I don't know. I guess I'm just overly blunt on the panels when I do them, and I enjoy that. I enjoy it. Thanks, Margaret. Yeah, I think that these are two pretty. This one, the top one here, Bitcoin to 1 million. That to me is just a simple math problem, and I'm a math person. I love math, so when we look at the facts behind it, it just makes sense that Bitcoin's going to get to 1 million at some point. But I think the really interesting one will be the stablecoin discussion, because it is transforming the U.S. economy, and it's just starting. And we'll have a lot of areas that impacts where we see significant growth of that industry based off of stablecoins. He did not text me, Lisa. So no show today. I can't do it anyway today because I got to go pick up my buddy. We got to go and grab my friend from the aeropuerto. Get that going. Okay, one other thing. Let's go and talk about trades today. So these are the adjusted values. But at least keep asking. I'm more than happy to go on this program anytime he wants. So I've got MicroStrategy, got UNH, I got CoreWeave, Palantir, NVIDIA. These have been painful positions. CoreWeave especially. CoreWeave, the good news for CoreWeave, it's been sitting right in that demand zone. And let's hope that one holds. But Palantir, hold on. That's not what I wanted to do. I was on the wrong thing typing and I changed my screen. So PLTR, right? Obviously Palantir not doing the best today. My average price is 136. I'm not too concerned about it at this point. We're at 153. That's okay. I'll tell you about the options I sold, but it did okay today. It did okay, but the good news, Oliver, is it's sitting in that demand zone. It's if you go to CRW, it's sitting right in that demand zone. That needs to hold. If that doesn't hold, I will probably dump that position and take a loss on it. And that'd be a pretty good loss for me. If it got down below that 83 mark, that'll probably be about a $12,000 or $13,000 loss. So that would not be a good one. But another one that's been very good to me, UNH. So United Health, those options expired. I sold more options today, expiring next Friday. So I'll show you those. All of these are the options I had this week. The only one I didn't have covered was NVIDIA. So unfortunately, I didn't make any money on my NVIDIA this week. I was wanting to, but I guess I just chickened out on it. But all of these expired worthless, so that's great. That's all premium we got to keep. That lowered my cost basis for all of these trades. These are the new ones for today. So I sold the $96 strike CoreWeave, collected $1.05, so that'll give me an extra 1% rate of return for the week. Assuming that CoreWeave doesn't have a huge rally next week, and rally up to 96. I don't see that happening. MicroStrategy, I did a little bit of a lower strike price to get a better rate of return. I sold the 365 calls against my position. Remember, MicroStrategy right now is sitting, let's do MSTR here so you guys can see it. Right now we're sitting at 325. So it's down another 3% in the after hours here. Not looking good at all. So luckily for me, I sold those 365s. Those expire on next Friday. Collected 384 on that one. And then, United Health. I did the UNH. So I sold the 325s. Let me update this one here. Get this one right here. And we'll go 325. So it's nice what's going on with United Health. Even though it's going sideways, I'm actually very happy with this because it feels like it's forming a base. I was a little apprehensive about selling the 325s just because right now we're at 315. Having a $10 rally next week would be about, a 3% move. I think it could happen. It could certainly happen. And I don't want to get rid of my UNH. I want it to kind of keep on. I want to keep on trucking. I want to keep on moving to the upside. I think that UNH is going to end up being a really great trade for me as this trend I feel is going to start to pick back up, and I could see it at 340, 350, and then getting up to the 400 mark. So that's where I stand with UNH. I did also UNH was the number one stock bought by Washington Insiders Congress. So yeah, really? I didn't see that, Steven. But that's funny. That makes a lot of sense. That'll be fun. So yeah, I think that UNH is going to be a great balancer for me and offset some of the losses on CoreWeave. If I take losses on CoreWeave or MicroStrategy, right, we're seeing some pretty big dips there in MicroStrategy in the after hours, and it's just not been looking good lately. And Bitcoin right now, okay, and that might be why Bitcoin's selling off just a little bit here in the after hour session. Yeah, there we go. All right, What else do you guys want to discuss? Do I have everything I got covered? Yeah, I got everything I wanted to talk about covered. Something else you guys want to discuss before I wrap up here today? Oh, man, I'm sore. I was working out 6-7 days a week. Is app on my radar? No. Not on my radar. Nope. I mean, the chart looks great. If that's what you're asking me about. Oh, Avgo earnings. I did not look at their final numbers, but we can go out here and look at that one. Let's go Broadcom. Normally, I like to look at all the numbers, but I just have not. Obviously, just crushed it today. Broadcom was up 9.4% on the day. I'll break this down into 5 minutes so we can see the big run up there in the early hours session. Man, what a nice run up for Broadcom. So let me go and look at the earnings calendar here, see how they did. I did not check this today. Was not trading this one today, just taking care of positions I had. All right, let's go look at Friday. Oops, sorry, not Friday. Yesterday's earnings was their Avgo. So Avgo, how good they do? They're expected to report $1.66, came out at $1.69. No big deal. My guess is it's talking about AI and their applications and how they're expanding their reach for AI, which is why they jumped so much today. But I mean, look at some of these other ones. Like Sienna was up 23%. Shoe Carnival. Come on, man. Shoe Carnival up 20% of the day? Crazy. Crazy. Do I think Apple will have a big impact on NVIDIA? Not really. They're different. They're very different in the chips that they're utilizing. NVIDIA is going after the big computer market, and I think Broadcom's going more after the mobile device department. But I think that there's some cross bleeding there. Do I think it's going to take away from NVIDIA's lunch? No, I don't think so at all. Not at all. Speed change of price movement screwed me up today. It happens. The old whipsaw, right? Andy says, does the 4-year cycle Bitcoin and halving are the same? No. So the halving, if you look at a price chart here, I can show you on the price chart. 1 second here. Let's bring it up. And we'll go daily, and I'll bring up Bitcoin. So if my memory serves me correct, which is the challenge here, if my memory serves me correct, the 4-year cycle for Bitcoin started in April of 2021, which is, when was the halving? Oh, no, it wasn't that. That was when the 4-year cycle started. So that would be, it's 2024, April 2024. So typically the halving happens earlier. I want to say April 21st. Let me look and see when. I'll just type it in here. When was the last Bitcoin halving? I want to say April 21st of 2024. I think it was April 21st, April 19th, 2024. So I was off by 2 days. So we can put that line right here, which is pretty much where it's at. The 4-year cycle that's not it. For some reason, it doesn't line up. And I know a lot of people think that the 4-year cycle is the halving. No, the halving definitely has an impact on it. And let me show you what 4 years looks like here. Give me just a second to clean all this up. The yellow box I'm drawing is your 4-year cycle. The blue vertical line is when the halving, let's go, there's November. So this represents 4 years, okay? This represents 4 years of Bitcoin's price action. So you had the initial year is down, 70, this was down, 75, 80%, 77%. We went sideways for a little bit as normal, slightly up. Then the Bitcoin halving happened in April. And usually after the halving, it goes down to sideways for about 6 months, and then it starts its parabolic move. Well, we did get a pretty significant move. I don't know if I would call this parabolic, right? It hasn't quite gone meteoric yet. For it to go meteoric, we need to get way up there, but we're not done yet. So to answer your question, Andy, a halving cycle is just when the miner's reward gets cut in half. Right now it's 3.125 Bitcoin. Back in, March of 2024, it was 6.5. So the reward gets cut in half, and that happens roughly every 4 years. It's 210,000 blocks. The reward gets cut in half. Avgo big deal is they figured out not so many NVIDIA chips will be needed like everyone thought. Oh, that's okay. What formation best fits Tesla and the daily? What do you mean, what formation? I mean, if you look at the daily time frame here for Tesla, to me, it feels like it's forming an ascending triangle, right? Because I've got these lows that really started back here in April of 2025. You're making higher lows, higher lows, higher lows, just higher lows all across here. And it's just smacking its head into this yellow box over and over again. So it feels like it's building an ascending triangle, which to me would be a pretty big, significant thing if it does break. I don't think it's a fair assessment or fair measurement because this is a pretty lofty one, but the way it would work was you take it from the bottom of the triangle to your neckline or baseline, which would be way up there at $364. And if I move this line from the breakout point, let's say we break through this in the next week or so, what's that target? Well, that target would put Tesla at $516 per share. So to me, Tesla looks really good right now from a trend perspective, right? It's making higher highs, higher lows. It has been basing for 3 months. It can't seem to get above that high, but higher lows, higher lows, higher lows, higher lows. That's a big thing. So it looks like it's getting better. It looks like it's building some strength here. And if that is in fact the case, then we could see a pretty big pop here for Tesla going forward. And again, I am bullish on Tesla long term. Not now, but long term. If Elon can 8x the Tesla market cap, he gets his $1 trillion. Yeah, I saw that. That's crazy. That's crazy. If he can 8x the market cap. Now keep in mind, look, if you're going to challenge someone to a task from a business growth perspective, there's one person I do not want to challenge. I would never challenge him, and that's Elon Musk. So if you look at, let's go look at the realistic probability of what does that could possibly look like. Was that the number, Big Ed? Was 8? He has an 8x the market cap. Was that the deal to get the trillion? I didn't see all the details of it. But if we look at it here, let's look at market cap right now. And Tesla is sitting down here at 1.13 trillion. So in order for him to get paid, Tesla's market cap would have to hit 9 trillion. Roughly 9 trillion. Was there a time frame on that one, Big Eb? Was it 10 years? Okay, thank you. I didn't know. So in a decade, let me do a quick poll and I'm going to wrap up. Let's see. The poll is, will Tesla 8x in 10 years? All right, there's your poll. So let's think about this for a second. I know some of you are going to jump in that poll right away. And you got a bunch of people here, so do it. Get it. Put that poll research in there while I have another sip of this whiskey and get ready to go. Look, 10 years. 10 years. Elon Musk already has one of the most intelligent AI applications with Grok and XAI. It is incredibly smart. It's incredibly fast. Now you also have Tesla building out robots, Optimus, which in my opinion will be a household item like the Jetsons. I don't think you guys may differ on that one, but it could be a household item like the Jetsons, where I know I'm going to buy one. I mean, look, I got a friend coming here and I just have, and I'm getting ready for a party. I have like no time to clean everything up. So it'd be great just turn my little Optimus robot and say, hey, mop the floors and do this and do that and do this and just get everything done while I'm up here doing my show. Absolutely worth it. So you have that. Then you have the whole robotaxi issue. Not issue, but robotaxi benefit. XAI is not part of Tesla. Yeah, that's a good point. XAI, I don't believe is part of Tesla. It's part of X. So, yeah. So, for me, the robots and the cars, not just a regular Tesla, but the robotaxis, I think it's definitely plausible. All right, I'm going to wrap up. I'm going to wrap up the poll here so I can wrap up the show. End the poll. 39% of you said no, not going to happen. 61% of you said going to happen. I'm in the will happen category. I probably won't be doing this show in a decade. I can't imagine doing this show for another 10 years, but I think that it's definitely possible. Now, I saw a comment in there that a lot of companies will 8x. Certainly, absolutely. But not a lot of companies with $1 trillion market cap will 8x, right? I could find some penny stock that's going to 8x or 100x in the next 6 months. Finding $1 trillion company to 8x, that's a different ballgame, right? Totally different ballgame. All right. Cool, fun. Good stuff. Let's see. For next week, we don't have anything really that pressing early in the week. It really starts on Wednesday of next week, so I'll just bring up the calendar here so you can see it. There's nobody of importance with earnings on Monday. You've got consumer credit, which is surging, conveniently surging again. That's an interesting one. They're expecting to go from 7.4 billion up to 10.4, so a biggie increase there for consumer credit. Other than that, not much to talk about. So I will, am I going to do a show Monday? I will do a show Monday. Like I mentioned that I'm going to be taking some days off over the next 2 weeks because I got a friend who flew in from Italy and I'm going to try to take off and go places. But that might be bookending the week. Like I might take Friday or Monday off. But I'm pretty sure I'll do Monday just because I haven't, things haven't been settled yet as to what we're going to do. So I'll probably do a show on Monday. So I will see everybody on Monday. Thank you guys for the participation. If you have something you want me to discuss on Monday's show, let me know. I'm going to try to find some more guests for you. But if you have questions, things you want me to discuss, let me know on YouTube by commenting, or you could just email me at TraderMerlin@gmail.com. That said, have a fantastic weekend, everybody. Do something fun. Cheers. I will see you guys on Monday. Take care.